The rate of Bitcoin adoption and political acceptance has been remarkably swift. When I started in 2020, I didn't anticipate such rapid progress. The approval of spot ETFs has been a significant windfall, and the shift to fair value accounting is another major positive development. Additionally, the political drive to allow banks to custody Bitcoin has been a pleasant surprise. Even more unexpectedly, Trump's favorable stance on Bitcoin adds to this momentum. This transformation is logical as capital is going digital. We're moving from 0.1% to potentially 20 to 30% of global capital becoming digital. It's rational for anyone invested in capital markets, the economy, or technology to embrace this shift. Seeing the Bitcoin lobby, the crypto lobby, Wall Street, and the banking sector all advocating for banks to adopt Bitcoin and custody their own keys is a clear sign of this inevitable digital transformation.
The rate of Bitcoin adoption and political acceptance has been remarkably swift and impressive. When I started in 2020, I didn't anticipate such rapid progress. The approval of spot ETFs has been a significant milestone, signaling institutional recognition of Bitcoin's legitimacy. The shift to fair value accounting is another major positive development, eliminating the unfavorable treatment that previously deterred corporate investments in Bitcoin. These changes have been significant windfalls, paving the way for broader acceptance. A particularly surprising and pleasant development has been the political drive to allow banks to custody Bitcoin. Despite ongoing debates and the SEC SAB 121 rule preventing banks from holding Bitcoin, there has been significant momentum in Washington, D.C., with both the House and Senate passing a bill to revoke this rule. Although the White House vetoed it, the very existence of such a bill indicates growing political support for Bitcoin. Additionally, Trump's favorable stance on Bitcoin has been another unexpected yet positive surprise, further boosting its credibility and acceptance. The transformation of capital markets towards digital assets is logical and inevitable. The transformation of capital markets towards digital assets is logical and inevitable. We are witnessing a shift from 0.1% of global capital being digital to potentially 20 to 30% in the near future. This digital transformation is rational and should be embraced by anyone who cares about capital markets, money, the economy, or technology. As digital assets become more integrated into the financial system, it is only natural for stakeholders to support and advocate for this shift. When you see the Bitcoin lobby, the crypto lobby, Wall Street, and the banking sector all coming together to clamor for banks to adopt Bitcoin and custody their own keys, it underscores the momentum and inevitability of this digital transformation. The collaboration of these powerful lobbies indicates a unified push towards a future where Bitcoin and digital assets play a central role in the global financial system. The progress in Bitcoin adoption, driven by significant regulatory and accounting changes, political support, and the advocacy of major financial lobbies, highlights the rationality and inevitability of the digital transformation of capital.
Subscribe our channel and press the bell button to get our video notification. And like the video.
The years from 2024 to 2034 are set to be transformative for digital money and digital intelligence. This decade will likely witness explosive growth and disruption in both areas. Digital capital, particularly Bitcoin, is poised to become a major force. While people often debate whether money refers to currency, a medium of exchange, or a store of value, the real disruptive change is Bitcoin emerging as a store of value digital capital. This represents a significant shift with the potential to be worth hundreds of trillions of dollars. The year before, a major technological breakthrough often sees widespread skepticism. For example, in 1903, before the Wright brothers achieved flight, the New York Times featured an article declaring that human flight was impossible. Similarly, despite AI advancements dating back to my time at MIT and early products like Apple's Siri, skepticism remains high. The underlying trend is clear. Digital capital is on a trajectory for substantial growth, and Bitcoin stands at the forefront of this transformation. The coming decade will likely validate these advancements, reinforcing Bitcoin's role as a crucial component of the digital economy.
The period from 2024 to 2034 is set to be a defining decade for both digital money and digital intelligence. This will be a time of extraordinary growth and disruption, particularly for digital capital. When we talk about digital capital, especially in the context of Bitcoin, we are referring to a fundamental shift in how value is stored and perceived. While traditional discussions about money often focus on currency, medium of exchange, or store of value, Bitcoin is emerging as a revolutionary form of digital capital that serves as a store of value. This represents a significant change with the potential to impact hundreds of trillions of dollars in value. The year before a major technological breakthrough often sees widespread skepticism. Take, for example, the year 1903, just before the Wright brothers achieved their first successful flight. At that time, the New York Times published an article declaring that human flight was impossible. This kind of skepticism is not new and can be observed in the context of current advancements in digital technology and AI. AI has been under development for decades, with foundational work starting back in my days at MIT. Early applications like Apple's Siri, which is over a decade old, have demonstrated the potential of AI, yet skepticism about its future capabilities persists. The key takeaway is that we are on the cusp of a major transformation. Just as the Wright brothers' achievement ultimately validated the potential for flight, the advancements in digital capital and intelligence will likely prove their value in the coming decade. Bitcoin, as a digital store of value, and advancements in AI are both poised to revolutionize their respective fields, validating the transformative potential that many may currently doubt. The next 10 years will likely solidify these trends, establishing digital capital as a cornerstone of the global economy.
The Bitcoin gold rush is driven by the fact that by 2035, 99% of all Bitcoin will have been mined. Right now, with 450 Bitcoin available daily from sellers, it's a prime opportunity to acquire Bitcoin before supply tightens. As mining slows, acquiring Bitcoin will increasingly require bidding up the price to attract sellers. This is the gold rush moment for Bitcoin, fueled by strong institutional and regulatory endorsements. Banks are eager to enter the space, and recent news highlights that the largest bank in Brazil is already making moves. The combination of limited supply and growing institutional interest creates a compelling environment for Bitcoin investment.
The Bitcoin gold rush is underway, and the urgency is driven by a critical factor. By 2035, 99% of all Bitcoin will have been mined. Currently, there are around 450 Bitcoin available each day from sellers, creating a window of opportunity to acquire Bitcoin before the supply dramatically tightens. As the mining of new Bitcoin slows, it will become increasingly difficult to obtain it. To acquire Bitcoin in the future, buyers will likely have to pay significantly higher prices to persuade existing holders to sell. This situation transforms the current environment into a gold rush for Bitcoin. Institutional endorsements and regulatory approvals have been pivotal in driving interest. The recent developments underscore this trend. Major financial institutions are eager to get involved, with news this week highlighting that the largest bank in Brazil is already taking steps to integrate Bitcoin into its offerings. With such endorsements, regulatory clarity, and increasing institutional interest, the current period is critical. As Bitcoin's availability diminishes, its value is likely to rise, driven by demand from both individual and institutional investors. The combination of a dwindling supply and growing acceptance makes now a particularly advantageous time for those looking to invest in Bitcoin. This dynamic creates a compelling opportunity for investors to secure Bitcoin before it becomes increasingly scarce and expensive.
Subscribe our channel and press the bell button to get our video notification. And like the video.